Live. Welcome everyone to our virtual happy half hour. We'll be getting started in just a moment. And as we wait for folks to join, just a reminder that today's session will be recorded and sent to participants after the session. You can also find recordings of our previous webinars on our website, thebrooksgroup.com. And once again, we'll be getting started in just a moment. All right, hello everyone, and welcome to the virtual happy half hour. Today is Friday, October 16th. This is actually our 19th webinar in the series, so we're hitting the big 2-0 in a couple of weeks, so we'll have to celebrate that. But today's topic is COVID. What's next for sales teams and how to plan for 2021, because it is in fact the fourth quarter already. I am Michelle Richardson. I run our Sales Performance Research Center here at the Brooks Group, and I am joined by Russ, our Director of Sales Strategy Effectiveness. Hi, Russ.
Hi, Michelle. Good to be with you again. And can you believe it's October already? I mean, we wake up every day and it feels like it's just like the day before, but it's the fourth quarter. And so we're going to talk today about what's next, meaning what does the fourth quarter look like for sales teams? And then how do we really plan on 2021 in a year, to kind of paraphrase Vince Scully, in the year of the improbable, the impossible has to happen, which is to come up with a sales plan for next year. So that's what we're going to do. And we're sponsored today by the Virtual Selling with Impact program. And just want to encourage folks that if you're looking to be able to figure out how to better sell virtually, to be able to increase the number of contacts that you add, to build trust, how to build up relationships, ask questions that really value, you can get those through an online program we do called the Virtual Selling with Impact. The next class starts November 2nd, and there's another one November 30th. So email forum or contact at thebrooksgroup.com. Rich will put it in the chat in a minute, and you can get more information on Virtual Selling with Impact. So our topics to cover today really is, how do we go about setting the number? How do we go about motivating our teams for what's left the balance of this year? How do we get our teams moving? How do we close the year well and then end up with a number that both management and sales will support? But before we do that, we want to just take a minute and start with a little reflection, because while the last 6 or 7 months have been very difficult, we've also learned an awful lot. And so that's where we're going to start. We went back to the survey, and Michelle, I think you've got some data to share with us there.
Yes, I do. Thank you. And we did revive our survey. So if you've been with us for the entire 6 to 8 months that we've been doing this, we did have a survey out on a weekly basis for about the first 3 months. So we wanted to revive that, really understand where sales organizations are right now. So let's take a look at how our sales organizations, our respondents, are pacing for this quarter. So as you can see, most are still behind plan. 63% are behind plan, 24% are on target, and 12% are above target. But we also asked respondents how they finished the previous quarter. And so these numbers are actually better. So we are starting to improve. It's slowly but surely. The previous quarter, 71% finished behind plan and 29% finished at or above plan. So generally speaking, organizations are trending better this quarter. They're trending better than they were back in June when we last did the survey. So that is good news. But we also asked organizations, how do you expect your targets to change for next year? So when we're thinking about that planning, what's next? How do we plan for 2021? This is what you have to keep in mind. We have 26% who expect their targets to be lower, and I apologize because I just misquoted that. We have 36% that expect their targets to be lower next year, and 41% expect to have higher targets. 36% are saying slightly higher. So perhaps the follow-up question that we didn't ask was whether organizations thought these targets are realistic or not. Clearly, we have some companies who continue to be optimistic about recovery. We have companies that are actually doing well in this environment, and they have some ground to make up for next year. But this is what you're dealing with. So if you are in that 41% that has higher targets, how do you plan? How do you move forward? That's the big question that we'll be talking about. So let's also talk about what's changed and what's going to change moving forward. So, that is our theme. What is next? So let's take a look at additional changes that can be expected in two areas. So the sales organization and the sales process. So we asked organizations, first of all, in their sales organizations, what changes had they already implemented and what was under consideration? And we looked at 8 areas really dealing with KPIs, targets, headcount, and roles and accountabilities. So what we're showing here are the top 3 responses under consideration for 2021. And these are actually topics that we have been talking about since March in some form or fashion. So things in that regard, the hot topics are still hot topics. The biggest change is in sales KPIs. So 53% of you are considering making changes for 2021. 24% of you already have done so. Number 2, 48% are increasing quotas and targets, and that tracks with what we were just talking about on the previous slide. And 34% are realigning sales territories. So this was actually one that was the number 1 change that had already been implemented. The other thing I want to point out is none of these are really blowout numbers for next year. So there's still a lot of variation across the board, whether it's under consideration, whether it's done, or whether no changes are going to be planned or no changes are planned.
Michelle, yeah. If I could just make a comment around the KPIs. I read some data this week, this is from Topo, that a lot of sales managers are kind of going back in and measuring their KPIs, and their studies that they've done over a number of sales leaders say that about 40% of sales leaders overestimate the conversion rate between lead and meeting. In other words, that first conversation and being able to get a meeting out of someone. But then they underestimate the conversion between meeting and opportunity by about the same number. They were in the high 30s for both of those. And what they were finding is that therefore fewer calls were actually still getting them the same number of pipeline. And it was an encouragement as you look at that to understand your KPIs and really see what's happening because it may be a misunderstanding in terms of where the numbers are set. And they went on to talk a little bit about how trying to increase a number if you're already getting the conversion rates may actually be just causing a bigger problem where there's some kind of constraint. So I find this interesting about the KPIs.
Yeah, that's a really great point. The last thing you want to do is make an adjustment that's actually going to hurt you rather than help you, particularly in this environment when things already feel like they're pretty tough. The one other thing that I will note is that least likely to change for 2021, 67% of organizations are not planning changes to compensation or headcount. So increase or decrease either way in terms of headcount. So some things there to definitely consider relative to the sales organization and how you, if you're out there in the audience, kind of figure out where you fall in that range. Now, we also asked about changes to the sales process. And we, again, looked at a variety of different topics from involvement of C-suite on the sales side and the buying side, margins, strength of competition, and value, ROI value, being able to communicate that. And so these, again, are the top 3 responses in terms of the most change. So number 1, communicating value and expected ROI to buyers. And we have been talking about that here on the webinar quite a bit. In fact, we at the Brooks Group just released a blog on communicating value and ROI, so I'd encourage you to check that out. It just came out yesterday. So that 66% indicate that that is more prevalent, more important right now. 60% are showing customer discount requests and negotiation attempts. They're seeing more of that. Again, we've been talking about that probably since the spring, and actually did a happy half hour focused on price pressure. So again, I would encourage you to check that out as well for strategy, that this is something that's really impacting your organization. And 58% say more calls are needed to close the sale. And not on this graph, 41% say key contacts are less available than before, which may also be part of the reason that it's taking more calls to close the sale as well. You know, going back to what Russ said, though, might be a good idea then to take a look really at your conversion rates from meeting to opportunity and lead to opportunity as well, just to make sure those are accurate, particularly if we're looking at the number of calls and meetings required. We also saw that many organizations were saying that their deal sizes were slightly smaller, and their time to close also was a little bit longer as well. So more, all in all, more discounting, more value needed, and more calls required to close the sale. So the top challenges for the remainder of 2020, I think the story here was, and continues to be prospecting and lead generation. So 71% of organizations, that's almost 3/4 of our respondents, indicated that prospecting and lead generation is a big challenge. Now, if you put that next to the fact that we've got quite a few of you that are expecting higher targets, obviously we've got to shore both of those up. So adapting to virtual selling is still an issue for 46% of our respondents, and maintaining margin for 40%. So again, these are all kind of connecting in terms of being able to get in front of the right prospects, being able to communicate value and negotiate and hold that margin. We had some comments too on the key challenges, and one of them really resonated, I think, with me in particular in terms of kind of encapsulating the challenges. And one person said their greatest challenge was empowering reps to connect with prospects in their current reality, and then consulting based on that. So really understanding where your prospect is in this moment, and then understanding that you may not make a sale off that initial engagement, but it may be more of a pull through based on developing trust. And I thought that was very insightful. It really does encapsulate where we are in the moment. So as Russ mentioned at the top of the webinar, we are sponsored by Virtual Selling with Impact. So if some of these data points hit home with you, really, maybe if you're pacing behind plan for this quarter, if your targets are going to be higher for next year, or you need to empower your reps to connect with prospects in their current reality, we encourage you to check out Virtual Selling with Impact. This is a 6-session workshop. It covers the entire sales process, and it will equip sellers to address the issues that we are going to be talking about today, as well as the data points that we've already discussed: prospecting, adapting to virtual selling, and closing profitable deals. So we have sessions starting on November 2nd, November 30th. We can also bring this program to an entire sales organization. And producer Rich has posted that information. If you'd like to learn more, contact at thebrooksgroup.com. And Russ, what have we learned?
Well, I love this picture because I think it's a great way to kind of pull together 2020. We started February in our days of Greece, young like John Travolta, smiling, and we left September more like Pulp Fiction. From Olivia to Mia is another way to think about it. But I do want to talk a little bit about what we've learned as we have aged and put ourselves into that zombie apocalypse. And this was an interesting piece of data I found out of McKinsey. It was published just last week, not the picture, this here. It shows that the stress that organizations are under paralleling sort of Q1 and Q2, especially coming out of Q2, was almost the same as they had in 2009. And so it's not to say that what we're going to see after this looks like the end of 2009, 2010, et cetera, but instead just to help organizations recognize that in almost every area, we've kind of been here before. We've dealt with this stress, and now we're starting to work our way through it. And so what have we learned? We've learned that COVID mortality rates have pretty much stabilized. We've got better public health guidelines today. More people are protecting themselves either with masks or eating outside or with social distance. And the real lesson that I take away from this is that we have, from a health perspective, gotten better through a lot of little breakthroughs, not just one big thing that was going to save us all. And I think that's a good lesson for us in our businesses. There's not one thing we're going to do that's going to make it better. It's going to be a lot of little improvements. So what does that mean for Q4? What do we put to work sort of now? Well, I think there's three things that we want to look at. First, process. We need to keep our focus around buyers. And that's something that we talk about a lot, but just a couple of points here that I've heard. What would your buyers say? What would your customers say is something they'd really like to see you improve in your business? For example, we continue to see in the clients that we work with, things like timely delivery are really important. And that doesn't mean just like promising them and sending them a different acknowledgement once that order comes in, but think about even how you deliver it. Maybe it's time to divide up the delivery trucks into multiples in the morning as opposed to one that runs all day long. But think creatively about how you overcome those problems. Another thing we're hearing is salespeople are following up meetings with what's being called a "we heard you," either email or maybe it's the first slide that's discussed when you come back to have the follow-up meeting, just to make it really clear that yes, we are listening and here's the things that we heard. Also data. Organizations have lots and lots of data. So we have KPIs, we have charts, we have P&Ls. But now is really a good time to understand what matters. Now that we're thinking about accounts, for example, some people we're working with are measuring the accounts that are down year over year above a certain percentage. And we have conversations about what's important. Is it the quantity of those accounts or the amount that they're down? What's more important? Or if you're going to go after new accounts, what's more important, the raw number of new accounts or the average sales that you get out of that new account? And so it's a good time to sit with your sales leadership teams, your management, and maybe a separate session with your executives, but understand what the critical drivers and metrics are for your business. Second is pipeline. Michelle's talked about this already. Finding new opportunities remains the hardest thing that sales is doing right now. And so just a couple of thoughts here. One, we're hearing people going back and really following up on every old lead they can find in the organization, old meeting within the last 18 months. Is it somebody who used to be a customer who stopped buying? Is it somebody you met at a trade show? Is it a business card you picked up at an association? Now more than ever is a good time to just go in and have a conversation that starts at least a little warm as opposed to a cold call. Topo also, I love this phrase, said that really right now sales needs to be working more on demand identification as opposed to demand creation, which means find those organizations that already recognize, as we say, an impact. They have a need and they're aware of it. And therefore, they're going to be easy to move all the way to a sale as opposed to somebody that you've got to go in and do a lot of early education. And finding that right balance is really going to be critical. And it's a full organization message. You've got to be able to hear what your customers are saying, be able to adjust whatever your data sheets, whatever your messages, whatever sales are saying, really around that idea of clear value. And how do you capture what sales is saying and get it back into the organization so they can think about things like rerouting delivery schedules or tying in more closely with supply chains? All of those things come into this idea of thinking about the pipeline. We're also seeing this greater focus on pre-opportunity leads, the conversion ratio from just raw leads to opportunities. This in a lot of organizations is either the handoff between marketing and sales, or it's the place where building the relationship transitions into now I get my first order. And it's a good spot to focus on if you're a sales leader right now. How effective is your organization? Even getting 5 to 10% better in this one area has a huge impact downstream. And I know we talked earlier about KPIs and making sure that they're right, but if you can figure out a way to make those relationships turn to opportunities more effectively, or marketing leads turn to sales more effectively, it will pay off. And then keep the message fresh and relevant. Another hint in this area we're hearing as well is this idea around frictionless voicemails. When you leave a message, transition from the idea of asking the person to call you back or anything like that. Let them know that you're going to be following up with them via email or text or something, so that they don't have to do anything. Because the less we ask of our customers and our prospects early on, the easier it is for them right now. And then finally, people. Given the difficulty of finding new accounts, do you really understand what service means? This is a great opportunity to survey your customers, either by your salespeople or through some kind of a third-party form, to ask them to define what good service means from a salesperson. What would they change? And then take action on it. I was struck this week. McKinsey also reported this month that they've measured the difference between average sales organizations and the best sales organizations when it comes to time spent in front of a customer during the day. An average organization, the report says, their salespeople spend about 16%, or around an hour and a quarter, in front of customers every day. Whereas the best sales organizations, the top 10%, spend somewhere between 40 and 50%. So look at your organization from this perspective of, what does service mean? Can we move some of it inside to an inside sales group or a customer service group? And can we get more time in front of the customers? And then the last one that's really important, and I think we're maybe even going to do a future webinar on this, is how do you get better at remote coaching? A lot of sales managers used to coach from either the passenger seat, the bar stool, or the dinner table. But now you don't get those opportunities with your folks. So how do you get in and set a plan? How do you balance empathy with the need for correction and for learning new skills? Those are the kinds of things that need to be practiced and need to be done. We spend a lot of time in our Sales Leadership Accelerator program on just those topics. We're recommending, for example, creating seasons of coaching where you work with a small number of your reps on some specific things, have good metrics around it so that you understand not just opinions, but the real data that shows what they're doing. And then when you finish with that, move on to another group. So if you'd like more information on that class, again, contact at thebrooksgroup.com email. We'll get you some information on remote coaching. And now as we look at 2021, the biggest thing we got to do is set a number, right? That's the goal. And as Michelle said, we started looking at this, and it had a huge number of data and ideas, and we talked with customers, and they just had a lot of things they really wanted to work on. So we're going to come back and do our next webinar all on planning for 2021. But right now, just a couple of things. Best practice we're seeing for targets for next year is a range of scenarios that have either monthly or every other month adjustment points, milestones where you can go up or down. Most of what I'm seeing says quarterly is too big of an event to be able to look at changing these plans. There's going to be bumps and accelerators, so we are going to have to adjust. A data point that I heard this week: 90% of organizations less than $1 billion are telling the researchers that they're going to be delaying long-term investments in 2021 and making it a year of tactical triage. So for some of you, that's going to mean great things. For some of you, it's going to mean a tougher year. But just generally, from a back of the envelope planning, most people believe the first half of 2021 is going to look a lot like the back half of 2020. Same issues, same kind of both headwinds and tailwinds for the economy. They think that 2022 is going to look like 2019, that we should be back stabilized and going again. Second half of 2021, it depends. And here's kind of some of the events, just as I thought this morning about what could either help or hurt. Obviously, in the US elections, a second CARES Act in terms of stimulus, vaccines, treatments, health of the international markets, health of travel, tariffs, unrest, protests. And that's just what I see today. And this is a year where we can't figure anything out beyond sort of a day or so. So create a range, you do the best you can off the data you've got for the end of this year and for 2029. Michelle talked about not a lot of people looking at comp. We are seeing this is one of those things where they're not quite sure what to do, and so therefore there aren't changes being made. The one thing I would say is look at the horizon. If we have greater visibility over 6 months, maybe think about a 6-month plan, or if you have some chance, look at adjusting and tell people you're going to look at adjusting as we get towards the middle of next year. And then another thing that's really key, and we'll talk more about this next time, is the idea that most of us are used to some kind of a physical in-person sales kickoff every year, a multi-day event. But now those are going to have to go virtual. And we have some best practices around that. Something simple as just making it a couple hours a day over 3 to 4 days, spreading it out. We're going to do a lot more on that. But if you'd like, again, some better ideas and hints, contact us at content@thebrooksgroup.com and we'll share those. And then finally, some initiatives for 2021 as you begin to plan. If you have budget for initiatives, continue to invest in digital tools. Everything we're seeing is that buyers want more and more self-service and interaction, particularly on the customer edge. I used to work for a company, and every year our customers would tell us, we want to be able to search inventories, and we just couldn't get that system up to a high enough priority. That was a nuisance and it was a problem for us then. Now, making that kind of delay would almost be death. And you've got to give your customers kind of that ability. Supply chain is key. Also, reskilling, taking the team that you've got and giving them new skills. And what we're seeing is this is around selling and the idea of how sales can sell more virtually, if not 100%, at least part of it. You saw that in Michelle's data. Customer service, how do they get better at resolving issues? And then 2 kinds of training, one around competition and one around remote coaching. Competition more for the reps, remote coaching more for the managers. And then finally, remember, this will at some point be over. I don't know that we're all going to get back to our Grease days and look like John Travolta and Olivia Newton-John did in the late 70s. But we're not always going to look like the Pulp Fiction John Travolta either. So be planning those things that you need to burst out for 2022. And with whatever amount of bandwidth you can, get some plans in place, because as this ends, there's going to be opportunity. And data continues to show that the companies that use these kind of hard times to plan and get ready to take market share are the ones that over long term are more successful. And again, more on how you set a plan for 2021 in our next webinar next time. Meanwhile, that's pretty much the summary. If you've got questions, we'd love to hear them. Go ahead and give us a shout on the Q&A or on chat. But here's kind of what we think are there. Move your organization more towards being buyer-centric and making sure that the things that you're doing to improve your business are focused on the buyers. And that sounds obvious, but I will tell you that a lot of organizations think about the customers. They will say they're number one, but they tend to be number 2 or number 3. Understand your metrics. Really focus on pipeline creation. As Michelle said, it's hard, but it's going to drive your success in 2021. Either continue or start with more remote coaching, making your reps more effective because they're the people either on the air or on the street. And then last, while 2021 is going to be hard, be thinking about 2022 initiatives. We had a question about creative ways to cross-sell virtually. And it's a great one. The biggest areas that I would recommend is it makes it easier to bring a rep in from another part of your business, another product line onto a call so that the rep who handles the account today could invite that person in. I think it's also a good time if you have an existing customer relationship, as you begin to have conversations with your customers about what they're looking at 2021, to raise some questions around other plans at other parts of the organization. And maybe for that meeting where you show up and your rep shows up and the rep for the other business organization shows up, maybe the buyer also invites a different buyer or somebody else to have the conversation. But those are kind of the best ways in terms of just sort of inviting them to the Zoom opportunity. Again, another one for a lot of markets that works well is to be asked to be introduced to different people in the organization. So if you know who typically would buy from this other product line, just ask the person you're working with to introduce you to someone over there. If it's about getting someone more sold into your buyer, then again, that to me is a part of the 2021 planning and selling conversation. Thanks for that question. Access to decision makers. It is absolutely harder than anyone else. And I would say that the number one thing we've seen is really work on the offer and the message that you're giving to people. In other words, how do you make that a meeting that decision maker really wants? So how do you focus and talk about value? One of the things that I've seen is that companies are very curious right now what's happening with other companies that are like theirs. How do they benchmark against their peers? And so sometimes being able to get into those new buyers is to say, look, we do business with a lot of folks in your industry. We'd love to be able to come in and understand and have a conversation so that we can help you understand, just kind of compared to the average in the industry. Where do you stand? Are you ahead or behind? And that seems to be something that in some industries, a lot of people are taking. You don't name the rest of the people in the survey. You just sort of say, here's the folks that we're talking to. You also in that process get to ask some good questions about what's happening in their business. And then another one is make sure that your offer, what you're calling and offering that person, whether it's via electronic tool. Again, we've talked about using handwritten letters, handwritten notes, maybe FedEx packages or something. Make sure that the value that you deliver in that is very clear so that there's a good reason why they would want to meet with you. If you send a catalog and say, hey, I want to drop by and talk about how, our products could help you, that's too generic. You've got to look at where they are and understand what you can about the business so that you can make a more focused communication in terms of how they're transitioning in this time. And then the last one, some tangible examples around being buyer-centric. Good question. I think that the number one thing I would suggest is have a conversation or do a survey with your customers about how you interact with them. Who are the best vendors that they work with? Doesn't have to be your competitors, but start with the question of, tell me about the best vendors you interact with and what makes them the best vendors for interacting. And then how do you rank me? If we're on a scale and they're at the top of the scale, where do we fit and why? That's a really good starting point to gather that data to come back and look at it. I think that right now, as Michelle said, there's a lot more requests for negotiation or price reductions, equipping your sales reps so that they, in the conversation, understand what they could do. Maybe they can't drop the price, but maybe they can do something with terms or either longer or quick pay for cash. Give them the tools so that they can have those interactions up front. In a day when it's hard to get to people and people want quick decisions, having to say, well, I've got to go back and talk to my manager or my manager's manager, and losing 2, 3, 4 days in getting an answer back to the customer is not being very buyer-centric. So be thinking about the challenges they're having and see if you can help them solve it up, number one. Number two, make sure you've got those the digital tools as much as you can so that they're getting the information they need. They understand what you've got in inventory. They understand how to place an order. They understand how to check an order once it's in place. All of those things are great tools. They understand not only what their sales rep's phone number is, but they understand how to get to inside sales or customer service, who those people are by name or who it is that's going to help them. The more you can tie that definition of service in to the buyer so they feel special, they feel like you're caring for them. And again, one of the biggest things we're seeing is just responsiveness. They don't necessarily need to get to the same person every time, but when they do make a call or they do send in an email, they want a response and they want it pretty quickly. So those are all some ideas around buyer-centric. Thanks. Thank you, everybody who came up with those questions. How do I convince my management? This is a great question. That our forecast was X and we closed above plan. We closed 30% above budget. But now I want to set a number for 2021 that is below what we did in 2020. I think that, this is a classic case almost for every forecast I've ever gone through where you set a number, your team looks at it, the data from the bottoms up says this is where we think we can get. And then many times the management team will ask for a little bit more. And I think it's going to depend a little bit based on the kind of management team you have. If they're analytical, you come after it with data. If they're not analytical, you've got to really still, I think, kind of pull apart the things that went right that caused your organization to grow. We have some clients, for example, who are doing really well right now. They supply pharma or medical. And so there's a big boom to their business, particularly in Q2, some others that do online work. They don't expect to see that same thing. So you've got to help them understand the market conditions that are going with that number. And then if all else fails, if you can't get off that number, at least start to work with some checkpoints through it where you have both committed and what I'll call upside or opportunity spend from a budget perspective and a number perspective, and be really clear that, look, we're committing to this, and as we go along and hit our milestone points, we can move this number up or, have some adjustments down. This is a time for sort of radical honesty and credibility with your management teams. Those are hard conversations. I'm not sure, to be honest with you, that many are going to sort of come back down to the number below this year. But again, I think that's part of the conversation. Just as you would not expect a rep when you assign a quota, if it's more than the number they gave you from the bottoms up, to accept it right away, you'll talk them through and get them to think about it. Same thing. Last 10 I'll give, and I know we're over time, so we'll try and wrap this up, is I always like to start from the end of the year backwards. And so if you're going to get a number for the year, don't just divide it by 4 and then put some kind of weighting factor on it, but really think about your business and what's a realistic number that you've got to get to for Q1 if you're ultimately going to get to Q4. I've seen some plans where they lowball Q1 so they can make sure they make it, and then they end up with this huge hockey stick in Q4 and come up short. But really try to build the plan backwards from December back to January, and then work with your team, your management team, and explain to them, here's how I built the plan. Here's why it says this in Q4. And if you just kind of keep working through all those steps, I think you'll get to a number that's logical. And then at that point, it's like all sales work. It's a lot of hard work to make sure you hit the number. So thanks. Michelle.
Yes. We will see everyone next Friday, October 30th. And as Russ has been telling us, our topic is going to be virtually planning a 2021 that will be partially virtual. So it's a mouthful, but it's going to be great. And we're going to dig in a little bit more onto some of these topics that we've talked about today. We thank you very much for joining us, and we look forward to seeing you in 2 weeks.
Yep. Thank you, everybody.
Thank you.